Hello everyone, welcome to the channel of Qianmo. We talked about year-end adjustment entries in the fourth session about financial report when we introduced the steps how financial statements are completed. In this video, we will introduce a year-end adjustment entry that you will encounter in the accounting work of almost all businesses. That is, depreciation. It's important to note that there are differences between accounting depreciation and tax depreciation. In this video, we will introduce accounting depreciation first, and in the next video, we will talk about tax depreciation. In any business, there are always assets that provide future benefits. They are either bought or created to increase the business's value and reported on the business's balance sheet. However, the value of the assets does not always stay the same as at the point when they are acquired. They can rise up or goes down. Depreciation is what happens when a business asset loses value over time due to use, wear, tear, or obsolescence, etc. There is no cash flow involving in the process of depreciation, so it is important for accountants to adjust the depreciation in monetary value to reflect the true value of the assets that a business owns. While talking about depreciation, we need to introduce fixed asset register that appears quite often at work. It is actually very simple. It's a schedule that records the historic cost of each physical asset owned by a business, the depreciation charged on each asset to date, and the net book value or written down value. Such information is summarized in the fixed asset section on the balance sheet. There are multiple methods in calculating depreciation in accounting, as we've learned in the uni. However, in work practice for small and medium-sized businesses, the most common methods are straight line, or called prime cost method, and diminishing method. In straight line method, the depreciation expense is the same every year over the useful life of the asset, whereas diminishing method results in a larger amount expensed in the earlier years as opposed to the later years over an asset's useful life. This reflects the fact that many assets are typically more productive and loses more value in the early years than in the later years. In regard to the asset's useful life, it can be assessed and worked out by the business itself, although in practices, we also often reference to the latest tax ruling for the effective life of depreciating assets that covers a massive range of assets in various industries. It is published on the ATO's website. Luckily, when we work, we normally don't need to manually calculate the depreciation. In the practice software that accounting firms use to produce financial reports, there are functions of fixed asset register or fixed asset management that records all assets and calculates the depreciation in minutes. What we need to make sure is that we enter the correct data into the asset register. So let's have a look at what information we need to enter into the fixed asset register software to enable the depreciation are calculated and relevant adjusting entries are generated correctly. Firstly, each asset's category, or in some software, it is called asset group. It is to specify does the asset fall under buildings, plant and equipment, furniture and fixtures, or motor vehicles, etc. Because the total value of that asset category or group will show on the financial statements. Then we need to enter the accurate description of that asset, like it is an iPhone 10. Also the purchase date, the asset's useful life, the depreciation method. If an asset existed on the register is sold or disposed, we enter in termination value. To enable the calculation and automatic generation of the related adjusting entries by the software, we also need to specify the account numbers for the relevant accounts related to the depreciation adjusting entries. After you have successfully entered the information for the acquired as well as the disposed depreciation assets, you can press the button for depreciation schedule. The software will produce the depreciation schedule. In the last video, we talked about work papers. For the fixed assets and the depreciation expenses showing on the financial statements, This depreciation schedule is the primary work paper that we should save as part of our work papers for the accounting work. Okay, that's all for today. Hope you find this video helpful to you. In the next video, we'll talk about tax depreciation. See you next time.